Oh, yeah. I think, so if there's none, let's move on to our next.
Okay. Now I'm going to talk about the supply side of the industry and how the future looks. This is the supply pie chart. USA, Australia, the big three, as I mentioned. Indonesia and Malaysia, the older producers, still significant. And Russia is Russia. Lots of potential, but lots of challenges. This is how supply has grown over the years, going back to 2007. And this is Australia, this blue line at the bottom, and you can see the US in the red at the top. This is a supply build-up chart, global supply. And the LNG industry really comes in waves of around 8 years, but it's not exactly 8 years. In that you have development, which will lead to overcapacity, which will lead to price downward pressure, which will reduce development, which will lead to the market tightening, and then that whole cycle tends to repeat. And you can actually see that on some of the profiles here. This one, that one, and we're in another upswing at the moment. In fact, we're really in the second of those 3 bullet points. In that there's a lot of capacity now coming on stream, both or will come on stream in a few years' time from the US and Qatar. And that's leading to an impression of overcapacity and downward pressure on pricing that we'll talk about. But you can see that in general, the graph is going up at a considerable pace. I mentioned these three very large producers, and you can see the ramp up in the US. The development of the US industry is really quite remarkable. How quick it has been. I don't think that could have been done anywhere else for a variety of reasons. But the US will continue to be the largest supplier of new capacity. But we'll talk about the recent pause in approvals. We talk about the types of suppliers that are out there. You have a traditional upstream producer, and these are people who just want to produce gas. And they turn it into LNG because they have to. They're not that keen on doing that. They really just want to produce gas, put reserves. They're sort of old style producers. They have limited interest in things like trading. They're increasingly less common actually, because and you can see that the sorts of companies that are in that category, because there is a lot of value to be had in other parts of the LNG value chain. It's much less common for companies to have this sort of focus at this point. National oil companies like Pertamina or Petronas or Sonangol and so on. They're usually very geographically limited because they are, specifically focused on one country, and they do tend to be looking at the upstream and liquefaction sections of the supply chain. The larger ones are taking a more active role in the industry, especially Qatar Energy and companies like Petronas, who are active globally. You have then the third one of what we call portfolio players. So this is a group of companies that look at the LNG industry and realize you can really make quite a lot of money from optimizing a network of supply and demand positions. And the first to really do this were Shell and BP. Others are now moving into this area either from the upstream or from the downstream. And I'd include, the 3 companies I've got, or certainly ExxonMobil and Chevron, are moving into that portfolio player area as their business develops. The fourth category is traders. This is the difference between traders and portfolio players is the traders have less assets. The portfolio players tend to have liquefaction capacity and that sort of thing. The traders tend not to. They tend to just have buy-sell positions, and they optimize the logistics between those two. They are very important. They provide liquidity into the market. They're relatively new in the industry, but they're the traders that operate in the other commodities like Gumbor and Glencore, Trafigura, and they have made a lot of money in the last 5 years with the LNG price. Traders make money with volatility and pricing differentials and arbitrage opportunities, and with everything that's happened in the last 5 years, there've been a lot of those, and so these companies have been very successful. The next category is the Russians. I'll talk about those in more detail. I think they're sort of self-explanatory. And finally, you have, as we had the upstream companies moving downstream, you have the downstream companies moving upstream, which is a number of the buyers looking to be more involved in other parts of the value chain. And finally, the US producers, which have a different model. They tend not to own gas reserves. They tend to be just trying to provide liquefaction services, if you like. And they do other things, but that's their main area, and I'll talk about them in detail too. As I said, we're in the stage of that mega cycle where new capacity is coming online, quite significant new capacity, and it's being built now. So where is it being built? It's those three places. The US, who knows whether the Russian new capacity is going to be available, but some of it has been constructed. Qatar is going through a very significant expansion, and then you have some smaller ones like Mozambique, which has problems that I'll talk about. But those three are the big players in terms of new capacity under construction. We talk about potential, and this is always a very big number. It's 1,000 million tons per annum, so it's 5 times bigger than the previous high. And that's quite normal. You always have a lot of speculative projects. They're not all going to happen by any means, especially that group in Canada. I think that's very unlikely to happen. The US is a little bit special. It has very large potential for new exports, but some political challenges. And of course, Russia has its challenges. That's the sort of landscape of new potential supply projects. I'm going to talk about them in more detail. So this is is looking at natural gas production in the United States, which has been growing significantly since 2010 because of the shale gas revolution. Natural gas in the US is very often produced as a byproduct of oil production. So that can lead it to not having the usual supply-demand issues, in that it's going to be produced anyway because the producers want the oil, and therefore something has to be done with the gas, and that's not really true in most other places. This is the growth in the US shale gas. This has really transformed the US economy in a way that I'm not sure is that well understood. From 2007, when the expectation was that the US would be a significant importer of gas, there's been this enormous growth of unconventional gas, shale gas, whatever you want to call it. And 3 areas really dominate: the Permian, which is here in West Texas and New Mexico, the Haynesville, which, as I remember, is around about here in East Texas, and then the Marcellus, which is this area up here, right through Pennsylvania. Those are the 3 big shale gas areas in the US. This is the what is the US export? It exports by pipeline, has for a long time to Canada and Mexico. But since 2017, liquefied natural gas is now larger than pipeline gas exports. So, very significant growth in the LNG piece of the industry. This is the map of the existing and potential new projects. Most of them are here, down on the Gulf Coast. One of the great things about the Gulf Coast is that it's not only in the center of the pipeline network, it's also relatively easy to get things built. Whereas if you go over to the west coast of the US and Canada, getting anything built is really very challenging. There are still issues down in the Gulf Coast, but it's generally much friendlier to industrial development, which is one of the reasons they're clustered down there. These projects have a very different risk profile. If you go back, LNG was really developed to develop a way of producing gas that was what we call stranded. So it didn't have an obvious market. So it was generally remote, often in very difficult, hostile environment. That generally means that projects are quite challenging. They can be prone to overruns and those sorts of things. Everything in the US Gulf Coast is the opposite of that. It's a well understood industrial development area, and it's not remote. There's an available workforce. You don't have to build airports and all these sorts of things, or towns. And because of that, it's been much more predictable. And the regulatory framework has been very supportive up until quite recently. That's the build-up. As I said, and the types of players. It's quite unusual. A lot of these players are standalone entities. They're not the big major projects. They're specific companies that have been set up, like Cheniere has been passed. Venture Global is another one that is a private equity funded enterprise. So the expansion is continuing. So they've gone really from zero in 2016 to the largest producer in the world in 2023. And that's why I say I don't think any other country could have done that. It's a combination of the available resources that they have, the availability of financing for these sorts of projects, and the technical capacity of the US economy to develop what are quite complex projects. That again is the build-up. What one specific aspect of the US industry is you can cancel your LNG cargoes, and you can see that big dip, which is during COVID, when demand dropped very significantly. The suppliers were able to just not take the volumes, which is quite unusual for the LNG industry. Where is the US exports going? A large amount is going to Europe because of the Ukraine issue. Some is going to Asia, but a lot of the exports have been going to Europe. And it's really made the availability of that volume to Europe has been very, very important during the Ukraine crisis. One concern that every country has, exporting country, is that exporting LNG is going to increase their local domestic gas pricing. Certainly true in Australia. And that was a concern in the US, and exactly the opposite thing has happened. You can see where US exports started, and this is the Henry Hub price, which is the US gas price, which has really just continued to decline. In fact, it reached an all-time low in February. It's gone up since then, but it's still quite low. So LNG exports have not impacted local US pricing at all. And one of the reasons is that, as I mentioned, gas is a sort of byproduct of oil production. It's also, LNG exports only 10 to 15% of the market, so it's not that big. There was some increase here during the Ukraine crisis, but not very big. There was the regulatory issue that's now facing the industry in the US is that the Biden administration announced a pause in new project approvals, a specific part of new project approvals to non-free trade agreement countries, which is most of them. So it's you need to have that to develop new projects. It's only for projects that don't have existing approvals in hand. So there is quite a big queue of new projects that will move forward or can move forward because they have approvals. But the real impact of this pause is on long-term confidence in the industry. Can you because there's no real limit on the amount of gas in the US. Very, very significant. They can continue to build new LNG export capacity if they choose to. The issue is really around policy. Do they want to continue doing that? And if you go back a number of years, we thought that the limit on US exports would be the fact that the local gas price would go up, and that would be politically unacceptable. That hasn't been the case. The issue here is around the environmental impact of LNG. And does the US want to continue expanding its fossil fuel industry? But so this is a confidence issue. It's not a near-term supply issue that we have to deal with. And we probably we'll see what happens. And really, the issue is what happens on November the 4th with the presidential election. And there's probably a binary, different way forward depending on how that turns out. But it is an issue for a country that, such as the Philippines, that is just starting LNG imports, is that the development of the US industry is an important part of maintaining the affordability of LNG globally, because you maintain that supply. I'm going to have a quick run through here now on Qatar. Qatar, historically was a smaller part of OPEC. From an oil perspective, it wasn't particularly big in oil reserves. Very, very large, one field, very large gas reserves, third in the international league table on gas reserves. And it's a very small country. So compared to Russia or Iran or the US, it's a completely different size geographically. And from being a bit of a sort of bit player in OPEC, it has been transformed into one of the energy powerhouses. This is a map of Qatar. You can see Doha, which is the main, very small population in Qatar, 2 million or so. And in the 90s, this northern area of Qatar called Ras Laffan Industrial City was developed by the government built a lot of infrastructure and brought in multiple international oil companies and other partners to develop. And it's not just LNG; it's also petrochemicals and gas to liquids and so on. You can see a picture of just the activity here in the port area. It's very, very globally significant industrial development. This is the North Field in Qatar, which you see is that blob there, and it actually extends over into Iran. So it's called something else in Iran. It's called South Pars, and the Iranians produce it as well, and both sides produce it. And it's big enough that seems to work. The Qataris and the Iranians actually have quite reasonable relationships, and the individual concessions are given out to the various joint ventures to produce from the North Field. There's so much gas there that you can see development from 2001 until around about 2012, I think. The Qataris said we're going to have a moratorium on new production because development has been so quick. We need to know whether the field can handle this very high level of production. That moratorium was lifted a couple of years ago. So the expansion of the Qatari export industry is now underway after that flat spot in new developments. I won't dwell on this, but the expansion is very significant, and it's in a series of different joint ventures with various entities, both producers and customers, such as CPC in Taiwan. But initially, phase one, 32 million tons, and then another 16. So it's a very, very large expansion. And Qatar Gas, as it was originally called, has been rebranded as Qatar Energy. And the bottom line is you'll see them as a very significant supplier into the market for the foreseeable future. Usually very focused on long-term commitments. So for a country like the Philippines, they could be a potential long-term supplier. Third one, Australia, completely different geographical scale to Qatar, and almost completely different LNG provinces. On the northwest, you have what are conventional supply projects, where you have a relatively small number of wells, and then an LNG plant and export. Over on the eastern side, which is Queensland, it's the opposite. You have thousands of wells, and these projects are pulling methane out of coal seams. So it's quite a very different technology where you're drilling along a coal seam and then extracting methane and then liquefying it. Those two are not connected. There's no connection between the two parts of Australia. In Australia, there's no national energy company involved, as there is in Qatar, for instance, and many other countries. And the development of these numerous projects led to them becoming the largest LNG producer before being overtaken by the US in the last few years. As you can see, the LNG tends to have a bit of a gold rush sort of aspect to it, and this is typical of that. You can see the ramp up. Everybody was suddenly doing projects at the same time, which very predictably led to a range of challenges around cost and availability of a whole range of things like labor and so on. But it was a very rapid ramp up. One of the problems, I talked about the impact of LNG on US local gas pricing, and that it really didn't have an impact. Well, the opposite happened in Australia. And the reason for that is that you can see in the chart here that the local use of gas in the eastern part of that map I showed is sort of along here. And then this happened with development of the LNG projects. And whereas in the US, this blue bar was only 10 to 15% of the underlying demand. In Eastern Australia, it dwarfed the local demand, and the very predictable impact of that was that local gas pricing increased. And it's not the only reason it increased. There are issues around the pipeline network, and government policy hasn't been particularly supportive to the LNG industry. But the bottom line is, when something like that happens and it's continued to go up, is you start to lose support for the industry, for there being an export industry. It impacts industry, it impacts households, and a range of other things. It's very bad for the industry when that happens. So it's sort of the opposite position from the US. Russia is quite interesting. The initial development in Russia was in Sakhalin, over here, supplying down into Asia, a very short trip down into Japan. And then the Yamal, what's called the Yamal development happened, which is up here, which is far north of Russia. Now, historically, that was icebound, but increasingly it is possible to take natural gas out of there and take it around the northern part of Russia and down into Asia in the summer with icebreaker tankers, which sounded a bit fantastical when it was proposed, but it has actually turned out to be possible to do. And the industry in that part of Russia has continued to expand, but has been impacted by sanctions and so on. Further expansion is really questionable. Yeah, the Russian industry is trying to develop their own technology and import it from more friendly places like China, which they'll be able to do in the longer term. But it has slowed down the development of the Russian industry. This is just shows what happened with Yamal. This is before the war, and these are the ship tracks from that Yamal area. So you can see in winter it all goes west down into Europe, and in the summer the red they go around the top and down into Japan. So it's kind of a novel engineering solution. The impact of the Ukraine conflict, there have been quite a lot of myths around this. Certainly, Russian supply to Europe did drop very significantly. This is the light blue you can see here on the bottom of the chart. The supply of Russian LNG into Europe really didn't. It carried on, and you can see the chart on the right between 2021, which is before the war, 2023, which is after the war. Imports into Spain actually went up. Same for France, same for Belgium. So it was, I think, one of those situations where it's kind of convenient for this to carry on for all parties, while pipeline gas was reduced. But the export of Russian LNG did continue and has continued. There are some new restrictions that have been put in quite recently around transit shipping, but the bottom line is that exports to Europe have continued. Now keep going here, talk a little bit about Canada. On one of the earlier charts, there was a big piece of the pie was potential new projects in Canada, which I really personally don't believe in. Canada is not like the US, even though it's geographically in the same sort of place. It's nothing like the US. It's much more like a remote area project development. They're sort of all clustered here on the west coast. One of the issues with doing projects here is you've got the Rockies between where the gas is, over further to the east projects, and they tend to be very high capital costs, much more like a remote project in Australia, for instance. And you can see that here, the cost of production in Canada is much higher than that on the Gulf Coast. So I suspect there may be some additional capacity for Canada, but not significant. Final one I'll talk about Mozambique. This is the opposite of the US. Very yeah. So this is the opposite of the US. It's a real frontier. It's frontier development, and one of the great new hydrocarbon discoveries of the last 20 years or so. Up here in the northern part of Mozambique, one of the problems is the capital of Mozambique is down here, right on the opposite end, which always leads to problems because there really is a lot of civil unrest in that northern part of Mozambique. Two very large projects by Total and ExxonMobil. I've been on hold now for maybe 3 or 4 years. What has gone ahead though is a floating LNG project where the liquefaction is on a vessel offshore. So it's a good example of where that technology has really helped. But the issue is that it's not very big. It's 3.4 million tons, whereas the onshore ones are much bigger. So in terms of global supply, it doesn't make that much difference. But it is an example of where that worked. But lots of gas here. If they could sort the political issues out, it will be a significant producer. If we look at LNG demand, actually, I think it's time for a break, isn't it? Or if there are any questions, we can ask questions. I think, yeah. Sorry. I think we're supposed to have a break at 10:20, and it's 10:21, so I'm exactly on time. Okay. Well, we had a coffee break at this time. Yeah. So, but we can have, if there are any questions, we can do that.
All right, okay, so we open the floor for questions so far. Let's check our Zoom. All right, we have here a question from Charlene Dacumos. What would be the impact in supply and price if you will remove Russia in the global LNG landscape, considering its sanction and ongoing geopolitical conflict with Ukraine?
Was that if we
All right,
remove Russia from the
if you will remove Russia in the global LNG landscape, considering its sanction and the ongoing geopolitical conflict with Ukraine?
Okay, well, it will, I mean, it will tighten, obviously, it will take some supply out of the mix. A much more significant issue is what happens in the US, but it will take some supply out. One of the things, though, with Russia is that even because a lot of Russian gas is still being produced, it's just going to countries that don't have sanctions against Russia. So the volume is still going into the supply mix. Now that's not entirely true for some of the new projects, which have some other challenges around technology. But overall it will tighten the market a little bit, but I actually don't think it's big enough to have that big an impact on the overall market.
All right. Do you have any more questions from our in-person participants?
In terms of reserves, natural gas reserves, how long do you think would be enough to supply projected global demand?
Sorry.
In terms of natural gas reserves, how many is there in terms of years or to supply projected demand?
Yeah, it's a lot. I actually don't know what the answer is to that, but it's more than for liquids. So the availability of natural gas is very, very large, especially in places like the US, where it's not quite unlimited, but it's very, very significant availability of unconventional gas. So when you have your oil reserves generally much smaller and with a shorter number of years, natural gas is much longer. And the numbers almost are a little bit meaningless because if there are 50 years, 100 years, that's it's as long as you need. So they're just very significant. There's a lot of natural gas available globally.
All right. Thank you. So
good morning. What is your projected outlook on the energy policies of European governments of the European Union on natural gas within the next 8 years? And how much impact do European policies on natural gas have on world discussions in the UN Framework Convention on Climate Change and Limiting Emissions? Thank you.
I think it's in some ways there are almost two realities in the discussion around energy issues, and it's maybe most stark in Europe in that you have the aspirations around decarbonisation, which are very strong in Europe, And then the reality of how do you actually make that happen. And it's much, much more difficult to make it happen than it is to have the aspiration. And I think you're seeing that in Europe now very significantly. And countries are different in Europe. You know, in places like Germany, you had, because they shut down their nuclear power, and then became very dependent on Russian gas. Their response to the reduction in Russian gas has been twofold. It's to build a lot of LNG import infrastructure, and secondly, to burn more coal. So those two things are very, very damaging in terms of their emissions profile. But it's something they have to do for energy security. They don't really have any alternative. So I think Europe will continue to have very ambitious aspirations for decarbonisation, but the reality is they will continue to use a lot of natural gas. And because of the Russia issue, a lot of that will be from LNG. So I think Europe as a gas market will continue to be very, very significant. And I think they'll continue to have this sort of confused view of policy, is my view. Sorry, what was the second? There was a second part. Sorry, it'll come back to me as soon as you get another thing.
Thank you for your answer. My second question is, how much impact do European policies on natural gas have on world discussions on emissions in the UN Framework Convention on Climate Change? Thank you.
Very, very significant. I think, the EU or Europe in general is one of the key players in that discussion. It's sort of been at the forefront in terms of pushing the more aggressive targets, certainly compared to the US. They're really driving a lot of the targets that you're able to set, and have very aggressive targets themselves as well. It's a very interesting, you can talk about this all day almost. But I think Europe is going to have a very significant problem in terms of its energy system, over the course of the next decade or so, because of what they're trying to do. So, do we have a coffee break? Okay, so we're going to have a short coffee break.